Good morning and welcome to this Diwali Blockbuster on Moneycontrol. I'm Mahalakshmi and I have a market veteran who can talk equally eloquently about global macros as well as Indian businesses, entrepreneurs, all things markets. Manish Chokhani from Enam Holdings. Manish, thank you so much for joining me this morning.
Thanks for having me.
Wish you a very, very happy Diwali first.
A very happy Diwali to you and all your viewers.
Sure. So, I was reminded of this quote this morning by Daniel Kahneman, who says that, the ease with which we explain the past every day undermines the fact that the future is unpredictable.
Absolutely.
Right? Now, if you look at the past 1 year, anybody who's reading Moneycontrol or anybody on the street would sort of decipher this very clearly, that last 1 year, gold, silver rallied because of, global geopolitical situation, de-dollarization. Indian markets slacked off because of excesses. AI frenzy is taking the US markets higher. Which of these mega trends do you think you can say probabilistically have a very good chance that they will be perpetuated over the next 1 year? Which ones do you think are probabilistically set for a reversal?
So great question. So first, to me, with where the US is today, with probably 70% of global market cap, and in that the top 10 companies being 25% of global market cap, is something which is not sustainable. And 30% of US stocks are now held by foreigners. And the president seems to be doing his best to antagonize every possible foreigner friend or foe as they may be.
Correct.
So to sustain a $65-70 trillion market cap, you need to really suck in large amount of flows. Looks difficult to me. AI itself is a business which is real, like the internet was in 2000. But I think what people are missing is that the valuations are discounting and earnings, which is very uncertain.
Right.
And a slight hit there can just change the earning profile dramatically, like we saw in the internet era.
Right.
That at that time, even Nortel or Cisco or Broadcom and so on, we couldn't see the end of the growth trajectory. And when the earnings went, they just went by 80-90% eventually, because they were capital good stocks in that sense, that no one was buying them repeatedly, like a consumer stock year in, year out. So that seems, I'd be surprised if it doesn't turn in the next 12 months.
Okay.
The other one, which is the debasement trade, is I think a much longer term trend. And it's been happening from the 70s in a sense, that when the US abandoned the gold standard and said we'll peg to the dollar, we've created a bubble every decade. So 70s, of course, it started off with the US Nifty 50, culminated in the famous spike of silver and gold in 1980. Went in the 1990s to Japan and Taiwan, which markets went up 12 times. Went in the 1990s to NASDAQ, which also then went up probably more than 10 or 12 times. Went in the 2000-2010 period to BRICS, emerging markets commodities, which also then climaxed with the rise of China. The last decade was indeed the decade of tech and the Magnificent Seven. And when COVID came, this excess money printing actually extended that bull market in my mind. But what the world took notice of is not only has US printed, but they've also captured money after the Russian crisis. They've been kind of weaponizing all means available to them. And that has led to this inevitable bubble which will happen in this decade of hard assets.
Right.
So back to gold, uranium, silver, all of those hard assets, real estate, those prices have been going up already in a silent bull market over the last 3 or 4 years.
Right.
I don't think the gold or silver bull market is a new one.
Right.
It's been happening, it suddenly has shot up.
Right.
And like with most bull markets, you'll pause for bread, but I think eventually they are headed much higher.
Right. So in this gold...
Yeah, sorry. No, go ahead.
So you've talked about two things. You've talked about AI frenzy sort of correcting in the next 1 year, which means that the US markets will see some kind of turbulence. You're saying that gold, silver is part of this trade, which is a mega trend, and it will likely continue. Tell me, in gold, it is a fact that central banks, not all central banks, it just gives us a feeling that all central banks are buying, but it is just India, China, and probably a few others, right? Like top 10 central banks, none of them are buying. European central banks are not buying. But off late, if you see the spike that has come in, my understanding is it is because there is a lot of money, financial asset that is chasing ETFs. It is largely driven by ETFs. Would it be correct to say that this spike is really a speculative spike?
Yeah, I mean,
Will that see a sharp
look,
correction? Is it possible?
gold, silver have no intrinsic underlying cash
Right.
paying properties. They
Right.
don't give you a dividend, they don't earn any income. So in that sense, it's all a kind of store
Later
of
fool's
value.
theory.
It's a store of value theory because you've got thousands of years of history
Right.
of
Right.
gold being a store of value and humans valuing it. And we joke actually at home that those who are over 50 think of gold as the store of value. Those who are 30-ish and below think of Bitcoin as a store of value because the governments can't produce it.
Right.
And which of these two will eventually win? Because these are all articles of faith. It's like when you buy a painting, if you think I like a Hussein, whether it's, you can't say it's 4 square feet and therefore it's worth 40 lakhs. It may be worth 40 crores. It's eye of the beholder.
Correct.
If enough people believe in it, which seems to be the case now with gold and with bitcoins, they both seem to be creating markets of their own. But certainly the belief in the existing fiat currencies of the dollar or the euro or the yen or the pound has certainly started going into steep decline.
Right.
Like you've seen a steep upturn in some of these assets, I think the day will come when you will see a steep decline in some of these currencies. Like, would you have imagined the Japanese yen going from 100 to 150 to the dollar?
True.
Unimaginable.
Correct.
But it happened. It's happened in our lifetime.
Yes.
And none of us could have predicted it.
Yes.
But same way, what does gold fall against? What does the dollar fall against? So if people are looking for an alternative to that, it will be against some of these hard assets. And why is Trump railing against the BRICS? Because he knows the most likely counterbalancing force in the world is going to be these economies. Because the rise of Brazil, China, Russia, and of course South Africa is no longer in the game, but Saudi seems to be the new player in town over there. And you will not trust a currency issued by any of these people. But if they say, I will settle eventually the difference in gold, then the game is on.
Right.
So how this plays out is like Lenin used to famously say, nothing happens for decades.
Right.
And then decades happen in weeks.
Sure.
We seem to be heading in that direction.
Sure. But what chance would you attribute to a sharp technical correction in gold? Because today it looks like, everybody wants to.
I'm not suggesting anyone buying gold or silver today. Anything which goes kind of into a parabolic rise is always suspect. But if you're saying, 3 years, 5 years out, like we say for our stock market, like last year we had a parabolic rise and we were all very, we hope this market goes sideways, best case.
Right.
If it corrects, better, but if it goes sideways, is the best case for us.
Right.
It'll be similar for gold, silver and stuff like that. But if these currencies are going to debase at the pace at which they are, then the rise in these is not over.
Sure.
I'm not suggesting you do anything in this season, but if you look back 3-4 years later, there will be, I think, still much higher.
Sure, fair enough. Now coming to stock markets. So one of the things that everyone is grappling with is that, of course, last 1 year we saw earnings slow down. Now there is greater level of hope and a bit of optimism that earnings will recover this year. Despite the correction and the recovery that we have seen in the past few months, valuations are not cheap. It's not a market that you just you want to go out and buy. How do you play in a field like this? Because earnings may come, earnings may not come. What do you think probabilistically is a more possible outcome? And how do you play this in this market?
So markets honestly are, how do I say, they want growth at a reasonable price.
Correct.
So it's not about cheapness. If you wanted a cheap market, you could buy Brazil.
Right.
Even in India, the cheap segment, like even when I say the index is a 20 multiple, like the PSU banks, or a lot of the banks, metals are significantly below that.
Right.
And at the other end, you will have maybe IT and all are kind of 20-ish multiples.
Yes.
And then you have, say, the Eternals and others of the world, which are
extremely
much, much higher.
Right.
So people chase price in relation to the growth. Now, if our growth slowed down as an index level to kind of single-digit level, and the multiple is 20, it's probably the right thing to say, I can't sustain this valuation, let the earnings catch up. Now, if you see the steps which have happened here, that if you've got a corporate tax cut, you've got a GST cut, you've got an interest rate cut, and the regulators pretty much pushing banks now to go out and lend, and the government pretty much goading entrepreneurs to go out and take risks, and they're giving them PLI schemes and what have you. The odds are now that the tailwinds are in your favor. and valuations have also gone sideways for a year. So while last year one was a bit sanguine about where the market's heading,
Right.
this year there's a reason to be a little bit more optimistic about it.
Right.
Also, the composition of the market has changed, that in the last 5 years, you would have seen maybe 8 or 9 companies were 25% of India's market cap.
Right.
The next 11 or 12 were the next 25%. The next 40 were the next 25%. So 70 odd companies was 75% of India's market cap. Today that has broad based.
True.
And what the problem is at the top end, that if IT per se is not going to compound at a very large pace, Reliance is not compounding at a very large pace, it really leaves the whole onus on the financial sector. And banks had slowed down dramatically, which seems set for a change now. So as you get some acceleration there, at the index level you start seeing some fun. But the broader market continues. You still have plethora of bottom-up stock ideas to do. And honestly, most Indians now don't really care about the index. Because everyone's bought very different odds in flexi-cap funds or mid-cap funds or small-cap funds or what have you, and created their own kind of unique index for themselves in their portfolios. Seems to be a good place now.
Right. So you were talking about this broad basing of the index. You think this is supported firmly on the foundation of earnings, or is it more driven by the fact that, FII selling has drawn down valuations for the bigger companies?
Yeah, I mean, FII selling been like what, couple of lakh crores. Domestic inflows have been far larger.
Right.
So it's not like FIIs have depressed it. They've sold it at a price and stocks have gone sideways. But like even if I look back, last bull market leaders were say HDFC, Kotak, Bajaj Finance. They went nowhere for a few years. It wasn't because FIIs sold them. I don't think they've sold them. It just was no one new came and bought them. Like what I'm telling you about US, it's not like that market needs 5 trillion of selling to bring it down. The fact that you don't get an incremental 2 trillion to buy the 65 trillion US market may be enough to keep it sideways or down.
Right.
So same thing kind of has happened over here. I don't worry honestly about FIIs because at the end of the day, everyone chases momentum.
Right.
Everyone was cursing China 12 months ago. It's uninvestable. There's no terminal value. They can seize your assets. And you get some momentum in China and look at the sort of wall of money which headed over there.
Yes.
I think it's the same thing here where you see traction. It's not like foreigners don't own, I'm just using again Zomato as an example, or EMS companies as an example.
Yeah.
They see the earnings, they see the momentum, they buy them at 100 P also. So cheapness is not a necessary condition for someone to come and buy your market. They could have bought PSU banks. The earnings is very much there.
Right.
The multiples are far below what the earning trajectory is over there, as an example.
True.
So it's really what your mood is and what you want to do at that point in time.
You think there could be a reversal in FII flows this year?
Possible, because if US particularly, I don't expect it to collapse, but if people anyway are tiring of US, they've played the kind of China trade as well. And from here, China should still have like a third upward leg. But most people have taken the first 40-50% gain over there.
Yeah.
So we're happy to take the trade and go elsewhere because there's still that anxiety about China. Like the analogies with say a PSU bank, that you make the first trade and then you're not sure that should I hold it till 2-time book or is 1-time great.
Right.
I think it's the same with China in people's mind that they can't put a proper terminal value to it.
Right.
And the odds are therefore at some point with the 3 kind of gushes we have of Indian tax cuts, GST cuts, interest rate cuts, and this government push, some earning momentum starts coming back, particularly in the banking sector. And I think we could be off to the races again.
Right. If you were to articulate some of the risks for this year, what would they be? Because I heard you also say in one of the recent events that, Buffett is sitting on $350 billion of cash. So imagine how much that is. Why can't...
He's thinking about the US, clearly. Yeah. I don't think he's thinking about India.
Correct. So is there any reason for us, for people to be cautious, for investors to be cautious in India? Do you need to keep this firepower for any crisis that may hit? In your mind, what are the possible risks that you might...
I always have maintained that you buy things bottom up, but you lose money top down.
Right.
Because your company never gets into trouble if you've chosen well. It's always an external event which causes it.
Right.
For example, 2008 was a global financial crisis which made Indian stocks fall temporarily. We got back on our trajectory. But say if US does blow a fuse, I'm thinking it's a more orderly descent where people rotate out of US and therefore that money comes elsewhere. But God forbid something goes really wrong over there. We will suffer because it's a global pool of money. When you're feeling scared and risk off, you're not likely to come and take risk in a new foreign market, for example. Last year, again, to just prove my predictive abilities are very, very poor, we all thought the coming of President Trump is a bonanza for India. He's going to be India's friend.
Right.
We'll be the first to sign a trade deal. We'll be off to the races on China +1.
Right.
And we've had exactly the opposite effect.
Correct.
So, who's to say what happens on geopolitical front? I don't think we anticipated a war with Pakistan. And if that war had not ceased, everyone was very bravado, we should continue, keep bombing.
Yeah.
If 2 bombs had landed close to Bombay, I don't think we'd be talking about stock markets anymore.
Right. True.
So the way the geopolitical mess is, because the world order is changing.
Right.
It is a big issue. I don't think we should treat it as if it's business as usual. America is doing its utmost to clearly define the world into 2 camps.
Right.
So you don't have China as your friend, and currently you don't even seem to have America as your friend, and we're
Yeah.
standing as the 3rd pole.
Yeah.
What this does to aspirations of smaller guys around us, you've already seen Pakistan, Bangladesh flexing their muscles.
Right.
How this plays out, what it does to us is very different. Same way, like, you had climate change or COVID type crisis, where you don't know whether you'll be alive 1 year later, forget about, stock market. So things like that are always there in the unknown. And for that, one always says keep like at least 2 years of cash for your expenses, so you don't sell in a crisis. And I have to sell because I need the money.
Right.
If that is on the side, if your asset allocation is okay, or sizing of your bets is okay, you don't get scared out of positions. The worst thing to do is you have to sell in a crisis because either you're leveraged or you need the money for expenditure or something. Short of that, if you have ability to look through crises, India eventually is going to make it.
Right.
Our terminal value of our businesses is far greater than what it is. By and large, these businesses will compound at 15% annually.
Right.
So the case for India long term, I don't think every year you can come and I'll say the same thing to you. It's not going to change. But in the short run, we cause accidents to ourselves with leverage or wrong allocations or wrong sizing.
True.
And that's what spooks us. So with those caveats, I think we should be okay.
True. So you are saying keep aside 2 years of cash
That's
for your
what works for me.
exigencies, I mean, in general.
Yeah, for most people.
But not cash as a strategic position to sort of, hunt through the years. That's not what you're suggesting.
If you're anticipating a kind of dramatic fall, it's good to have cash, but most people will have some kind of inflow coming.
Right.
Even if it's a 2% dividend inflow, it's an inflow.
Right.
If you have some salary income or business income coming, that may add hopefully another 5-6% to your income levels.
Right.
Normally, you're not 100% always in the market. Even if I'm very bearish, at most I'll go 10% cash, 15% cash. Unless it's like 2008 type crisis where you can see in 2007 this is going to blow. 2001 crisis, you could see this is going to blow. There's nothing like that in India to suggest this is going to blow out. So for that to go to 20-30% aggressive cash call is not warranted today. So some cash, again, depending on how greedy you are, because some of the stocks you can always rotate.
True.
And, in times of crisis, you become more and more into large caps because they tend to be a lot more liquid. It gives you a chance to rotate out. But I don't think there's a case for making a very, very bold cash call today.
Okay. Would you say there are more opportunities in the large cap space today than in the broader market?
Honestly, I don't think of it like that.
Okay.
If I look for asymmetrical bets, the mantra I've given my child is easier than what Nimish Bhai had given me. He said, when you buy a stock, only pull the trigger a few times. But can you imagine this company's profits equaling its market cap? Even if it takes 10 years. Even if it takes 10 years. If you can't imagine it, the market will never have imagination and terminal value for this company, right? If you can think of that and that makes you start thinking about the business for 10 years, then you buy it because you're an owner of a business. You're not a stock trader for buying for the next 6 months or 2 weeks or whatever. I've made it easier for my son. I said, think, can the company you're buying today, can it be a 5 PE based on what you're buying in a 5-year horizon?
Okay.
If you think of it logically, that means if it's a 5P in 5 years, your worst scenario is the companies we buy will never be below 15 multiple.
Right.
And I don't think long-term stocks survive more than 25 multiples.
True.
Which means you'll make 3 to 5 times in 5 years,
Right.
which is a good rate of return.
Right.
But if you can't see out for 5 years in the business, why are you buying it? Because you could be buying in momentum that, this platform company is taken off and it's growing 100% a year.
Right.
But in 5 years, if it's still going to be a 40p,
Right.
what are you betting on?
Right.
So if you think of, I mean, basics like how a businessman would think of payback for his
Right.
money.
Right.
Because eventually we are owners of businesses.
Right.
And we should act like we are owners of businesses.
Right.
And that 5 multiple represents a 20% return on your capital.
Right.
And I can wait for it for 5 years. After that, I want the business trajectory. Right? So it's just a useful shorthand that one can use.
Right. Any pockets in the market that you feel today are poised at a level that this kind of especially in new economy businesses, or
new economy is hard to find today at these multiples. Usually we buy them in private markets,
Right.
not really post-listing.
Right.
They occasionally come, in a crisis. Like 2 years ago, I remember Zomato had gone down to 50
Yeah.
after the issue. So, that was a good opportunity. I mean, where the valuations are today, I'm not really suggesting anything like that.
Right.
But like I said, it's more likely we are able to do that in the private space, not in the public
In the
space.
public markets, where do you see?
Public markets, it's clearly financials are poised for, a takeoff. I think public sector, because Finance Minister herself has said that now that we are done with our tax and other work, we will focus a lot more on PSUs. They've even indicated, for example, on public sector banks that there
Right.
could be another round of consolidation there.
Right.
It could just bring attention back to that space. Third, this whole mega theme which is going on of hard assets against the dollar debasement is a theme which is a decadal theme. So a lot of hard assets, whether it's metals or real estate and so on, they have legs to go over here. And there are different ways to play. Some people may even actually benefit by just buying REITs. You could make 14-15% even on REITs as an example. So if you think of it, there are enough things to do. Fortunately, we don't run public money. So
Right.
we can spread ourselves across various asset classes and maneuver depending on where the market is.
Right. In some of these themes like, defense, EMS, some of these look like long-term themes.
That's right.
Do you think these valuations will sort of sustain?
It's always a trade-off, no? Because when the theme is so well known, question is the market missing anything?
Correct.
Or are they priced for good execution?
Right.
In most cases, I think they are priced for perfection in execution and they can't afford any deviation there.
Right.
Which is why you see when some companies give you results which are maybe 5% below expectation, the stocks plummet by 15 or 20%. And the reverse happens in cases where companies beat expectations by even 2-3% and the stocks are up 5 or 10%. So it's really about expectation versus reality. And in places which are well discovered now, I would submit, the sectors you're mentioning are of that type.
Correct.
The sectors will do very well, no question. But what the stock prices will do is a different question. I often give this example of like when the IT boom was on in March 2001, our best company Infosys had already reached a $45 billion market cap. 24 years later, we are probably at 80 billion. So it's not even doubled in dollar terms in 24 years.
Right.
So you may buy the best company, but you get the pricing wrong and you don't make money. The business, of course, has done really well.
Right.
But as a stockholder, it was your mistake that you paid a foolish price.
Right. Manish, as a strategy, I have also grown up, with this philosophy that if you buy good businesses run by good managements and hold on for a long time, you will compound your wealth well. You think this philosophy is getting challenged in today's environment where so many things are changing, capital is becoming so easy for people to raise, so therefore there is significant overvaluation. Second thing is tech is coming and disrupting so many businesses. You think the time period that investors need to think about, does it change to your mind?
So there are some businesses which will surely get impacted by tech, like it's been in the past as well. And there are some which are beneficiaries of that tech. So while it's always popular to go and chase the new tech, it's easier to find who will lose because of that tech than to find the winners there. For example, when EVs come, we don't know who's going to win, but we know the incumbents are going to be in trouble.
Right.
But say like when internet came, we didn't know which internet company will win, but we knew financial services is a big winner because I could start distributing my research globally.
Right.
I could start servicing people globally without having to put physical resources.
Right.
And the new companies which, for example, have come are taking old products. Like take a Nykaa, it may have taken a perfume which a tier 2 town may have never got and made it accessible. And that person knows now I'm getting a genuine product and it's not a counterfeit. So it's just use of technology as a means of distribution, which has expanded the market opportunity for them. So same way, there are some in AI, like I believe people who have organized data sets. Again, financial services is a big beneficiaries of that. When you can use organized data sets and apply AI on it, boom, you're off to the races. When they use it in healthcare to come up with sort of new protein combinations, new drug discovery, the whole pharmaceutical industry will change dramatically. It won't be this old type of pharma.
Right.
So unfortunately, our old Indian IT, Indian pharma, which were our big export engines, are at some risk. And the new ones we are not able to play because it's really coming out of US and China and so on.
Right.
But if you stay out and you say, okay, I can still play through financial services, I can still play through materials, because not like China can come and dump cement over here, or government is going to safeguard me on steel and so on. There is room to play over there. In some manufacturing type businesses, the rise of robotics and all, for example, may alter.
Right.
It may change a lot of our blue collar guys, because I'd rather take a robot at $1,000 kind of input price, with no liabilities, no holidays, no off days and so on, no overtime, and start putting robots over there. So some of these are going to be fun, but this is the fun of investing.
Right.
You're learning all the time.
Right.
You're dealing with the smartest people in the world, and you don't have to take a bet on everything. You get occasionally few asymmetrical bets. If you think you get that asymmetrical bet, then the actually tailwind for some of these businesses is so large. The best example is if you got any of these Magnificent Seven, and you were sitting, it's not like Nvidia rose now.
Yeah.
It's a 20-year-old story. It went up only in the last 4 years.
Right.
Google's been around also 20 years. It peaked in the middle, then it had its drama that, oh yeah, I will kill it, and then it's had a revival again, and so on. Same way, even across the border, the Alibaba had its greatest run, then the collapse, and then it's back again after the races. So some of these great companies are going to continue to do well. And I think you'll find enough of them here also.
In India, where do you think one of the points you make is that, find Indian companies that can scale globally based on the, with India as backstop, right? So where are these businesses? What kind of businesses do you think have the potential for India to build competitiveness like that?
The analogy I give is when Japan came out into the world and became dominant, you saw Sony and Toyota and all these companies come here. Same way when Korea grew, you got their cars and you got their electronic products and so on coming. You're seeing the same thing now with China. If India is going to be third largest, we cannot think we are going to be third and then head towards second unless this happens. So if every country has done it, we are not going to be any different.
Right.
Same way generationally, like our generation grew up thinking, oh, let's get a good house and a good car, and that's end of life for us. The next gen is coming, like what can we have impact on? Because their monetary needs are by and large fulfilled for many people, I mean, not for the whole of India. But these guys are able to play that game. There's no dearth of capital. They are all kind of global citizens. Most of them have studied abroad. So today, what was the cut, copy, paste model of I could copy Amazon and bring it to India. I could copy, Uber and bring it to India. The new gen is like, say a Zoho is saying, I will now build my own Microsoft Office.
That's right.
On the tech space.
Right.
But on the products and services side, now you think if LVMH could take European artisans and make them a global brand and make them an aspirational product, can, for example, a Titan out of India create Indian jewelry, Indian design, and take it and globalize it?
Right.
I'm not saying it will happen, but as an illustrative example.
Right.
Same way, the Western model of healthcare has been curing your symptom with allopathic drugs, and mental health is something else. The Indian Ayurvedic system is something which is very integrated wellness. Is that something which can come out of India?
Right.
It may not be a Dabur, but will it be someone else who can take it and go out?
Right.
Same way, Indian services experience, which again, we think our hospitality is great. When you go to Europe and you go to US, you're horrified with your hotels experiences. Can the Tajes and the other hotels, I'm on the board of one of another hospitality company, can they also eventually scale up in India and then take that learning and globalize themselves as well? These are all things which will happen, and they are decadal plays.
Right.
And as you see, then rate of change, you don't need a lot of equity. Once you're established, the cash flows allow you to compound from there, and the opportunity set is large. So there are enough across spaces, financial services again. Why do we think only Citibank or Bank of America can come into India? I know ICICI was out in the past, they withdrew. Can it be possible 5 years later, ICICI, HDFC, SBI are seen outside as well in the region? So there are enough degrees of freedom. As the country will grow, this is inevitable, it will happen.
Right. Such a pleasure talking to you. Manish, in one sentence, give us one advice for investors for this year.
Oh, no advice. Just lead a good, happy, balanced life. I say on Diwali always, it's not enough only to worship Goddess Lakshmi, because Lakshmi without Saraswati, which is knowledge and wisdom, is not going to stay with you for long. So keep investing in yourself in knowledge and wisdom. And our third goddess is Durga, who's the goddess of emotion. So unless you have the right emotion, the right happiness, your right family bonding and good relationships, all the wealth and all the knowledge is not going to be of use as well. So keep all three goddesses happy.
True. True that.
And as the best line is, happy wife, happy life.
All right, on that cheerful note, thank you so much. Wish
Thanks
you a
so
very,
much.
very happy Diwali to you and everybody at Enam.
Thank you for having me.
Thank you
Happy
so
Diwali.
much.